Good afternoon. Welcome, everybody. If those of you in back, please come on in, take a seat. We're going to get started. My name's Chuck Bowl. I'm the director of the Master of Real Estate Development and Urbanism program. Actually, correction, I am the Tony Goldman Director of Real Estate Development and Urbanism at the School of Architecture. I'm going to kick things off on behalf of the School of Architecture, the Miami Herbert Business School, and the Law School, and the University of Miami. Welcome back to the U. I want to recognize our presenting sponsors who've been with us from the beginning: Witkoff, the Kislak Family Foundation, and Douglas Elliman. Right from the very beginning, we've been doing this since 2010. Thank you to them. Also want to recognize trustees who are with us today. Joining us, Steve Sines, welcome. And although they're not quite in the room yet, I see Toby down in front. I do want to recognize Ambassadors Chuck and Sue Cobb, who are going to be with us and obviously supported the U in so many ways over the years. Chuck is actually the longest serving trustee, 5 decades as a trustee. We just had a great family business seminar. The Cobb family was there. 3 generations of Cobb family members on stage. Simon Ziff was my partner in crime running that. We had a great mix of families. The Rosenbergs, the Witkoffs participated, the Garchik family, the Easton family, another trustee family, the Murphy family of coastal construction, Bobby and Ron Finbarb, I know Ron's here, and the Motwani family. Terrific group of people who are also just great supporters of the U, advisory board members, and all of them. Thank you so much for making that such fun, really enjoyable. So this is our centennial year, 100 years of the U. Amazing, right? And if you think of the Ivy Leagues and where they were after 100 years, I think we're doing pretty good in our first 100 years. Campus looks amazing, right? If you have not been here in a while, take some time and walk around. It's been transformed easily over the last decade. And even if you were here in 2022, which was the last time we had it here, there have been major changes. The whole west end of the campus, where I'm located, the Centennial campus at the Village is all being finished. That view will be completely different, and it's moved so fast. We really have become a residential campus. We have so many more students living on campus. If you walked in from the garage, you could have got a haircut at the barber shop in the base of the Lakeside Village, or got your nails done. It's a very livable, really wonderful place to work and for the students to study and to live. And the whole pedestrian and landscape connection all the way across east to west, all the way down through the new Centennial Village, has all these gathering places and goes straight down to the Wellness Center and then beyond to the Lennar Clinic. Really terrific transformation. The other thing that's happening, why we're here, is on the programs and the academic side. This conference has been co-organized since 2010 and has involved support for real estate education at the U across all 3 of our schools. I want to call out, because I know there's a lot of you here, let me hear from, or stand up, any alumni in the room. Whoa, look at that, terrific. Okay, how about any advisory board member for any school in the room? And then how about any current student in the room? Look at them all, see them all around you. We want you to engage them throughout the day. I know you already have, and continue that. And then, last but not least, how about the faculty? Some faculty? All right. As I said, we started in 2010. This has become a signature event, a gathering for the industry, but also a cornerstone of support for our real estate education program. Since the pandemic, we've had 4 conferences, and this conference has raised over $3.5 million to support the real estate programs in these 3 schools. So thank you. We started early, as we always do. There was a VIP event last evening that is sponsored by Steve Witkoff each year at Cipriani's. That was great. We rushed from there, some of us, Dr. Houston and I, over to the Bayshore Club for an alumni event that the law school organized, which was terrific. And then this morning, ACOR again sponsored the great Canes Connect session for career session for all 125 alumni and current students came to that. And then Swire sponsored and has from the beginning the Swire Scholars Luncheon, where we bring together students and advisory board members. So thank you to all of those continuing support for all those great events to get us going. Now, lastly, I'm just going to thank the advisory board members in general, because they do so many things in terms of engaging our students. They come into the classroom, they do site tours, they hire them as interns, they hire them ultimately to work for their firms. They provide support in so many different ways. So thank you all. You're making a real difference in the lives of our students and our alumni going forward. Thank you very much. Now, please welcome my friend and longtime colleague. We've been at this for a long time from the beginning, and Andrea Houston, who's also Director of Real Estate Programs for the School of Business, is going to be telling you about the program, and she is our program chair for this year. So please welcome Andrea to the stage.
Thank you, Chuck, and it is always a privilege to be able to stand up here and look out over this room and see so many new and so many familiar faces. Welcome to the U. Every year we think this gets bigger and better, and I'll just give you a little brief rundown of the program for today. Starting with the end, we are going to have a session of views on the domestic market, and that may change between now and when we start that third session, but we have some real experts for that. In the middle, we'll have a session on reinvigorating cities with people who have worked very, very closely in Detroit and Chicago, and they will share some ideas about things that we might want to think about here in Miami. At the beginning, we have the global view, and I will introduce one of the members of that panel in a second. But before I do, I want to take the opportunity to ask, and with the lighting up here, I really can't tell if they're here, but I'm hoping that Peter Macris and Mark Levy are here. They are the founders of our mentor program. So if you see them, if you're interested in becoming a mentor, that's been running for 3 years, and it's been a very valuable experience for our students. I also want to thank the support group that you do not see. There are people who have completely fulfilling jobs, who take large chunks out of those weeks to help us organize this program. And I practice saying their names really, really quickly, so I'll see if I can get through. But Caitlin and Natalie and Blanca and Jillian and Roxanne and Nick and Eddie, thank you for all that you do, because we couldn't pull this off without you, and I hope I did not forget anybody. I also want to say that I think probably some people in this room either own buildings or manage buildings or build buildings. And if you do any of those things, we have a new initiative with our entrepreneurship department called U-Scale. And we have 5 entrepreneurs here. They'll be out at the high tops to my left. They have products that will help with plans, HVAC, glass, painting, all of these pain points. They have new products they'd love to chat with you about. So at the breaks, take a chance and go see the entrepreneurs that are out there. I would like to introduce our first session, and I'm not exactly sure when you should come up on the stage, but our first session, which is Global Investment Views, one of the participants is Alfonso Munk, who is now the co-head of investment management for Hines. So he manages their global investment approach, and he's got 25 years experience investing throughout the United States, Europe, and Latin America. And Alfonso is so much fun to be around because he's very passionate. He is passionate about promoting education. He's passionate about diversity. He's passionate about connections. He's a member of the advisory boards at Miami, Cornell, Wharton, I think probably a couple more, ULI, PRIA. So he is involved with all aspects of our discipline. He's also very global. He's fluent in 4 languages and he's lived in 7 countries. So I would like to welcome Alfonso to the stage, and he will introduce our other guest, Rana Ghorayeb from Ivanhoé, Cambridge, CDPQ, or thereabouts, some set of those names. Thank you.
Thanks. Thanks, Sandra. What she didn't say is that apparently I scared a lot of people yesterday in the advisory board. Talk about it, artificial intelligence, how all of us are going to be replaced by a machine. So at some point, there won't be a need for some of us. Today, I have a pleasure to introduce Rana Ghorayeb. She's a friend, she's a partner, one of our most important partners at Hines. Pretty impressive career, which I'll walk you through. She was telling me, don't say all these things, but I'm going to have to because obviously she has impressed me over the years. She currently serves as Executive Vice President and Head of Real Estate for CDPQ. She will explain who CDPQ is because some of the people in the audience might not know. She's been doing that since May of last year, and she's responsible for all the real estate investment strategy of the pension plan. It's a big pension plan in Canada, as you will hear. She's a member of the CDPQ's Executive Committee, Investment and Risk Committee. She sits on the board of CDPQ Infrastructure. It's a subsidiary that asks for, and she's been very involved in the infrastructure side of the business as well, beyond real estate. Prior to her current role as a global head of real estate, she was the president and chief executive officer of Otera Capital, which is, it was a wholly owned, or still might be, and if I miss it, but a subsidiary of the CDPQ, who was responsible for commercial real estate financing. Who might have financed some of you guys in the audience because they've been financing a lot. She has an impressive background, to be honest. One of the most impressive ones, she got recently awarded last month the medal by King Charles III on what's called the Coronation Medal in Canada, which awards the outstanding people who've made significant contributions to Canada and their provinces. So she's one of 20,000 over the years of this that has been awarded. So I'm very, very impressed by that. And beyond that, similar that I'm involved in educational institutions, her and I share a lot of that. I'm going to try her to get more involved in the University of Miami, but she's a member of Concordia University Board of Governors and Real Estate Planning Committee. She's received numerous awards. In 2022, she got the award from the Association of Women in Finance in the province of Quebec. She's part of the International Alumni Year of New York University. We'll hear about her educational background. She got numerous awards over the years, so I can't list them. And like me, she's a very international person. We've crossed paths over the years in a lot of places. So it's been a pleasure to work with her. And those of you who meet her, you'll see she's a really outstanding person. So with that, which are all the accolades, I want you to, Rana, maybe for the audience, tell us a bit about your background, because you really have an international, multi-diverse background, and a lot of people in the audience are like that, from where you grew up all the way through where you got in right now, where you are.
Thank you. Well, first of all, I wanted to say thank you so much for having me. It's actually my first public speaking since I took on the job, and when Alfonso approached me, I was very honored to come to university and speak. One, for the students, but two, of course, to speak about real estate. So thank you so much for having me. My son is actually here. We left last night, Montreal, in a blizzard. To arrive here is really, honestly, it's a world of difference. Actually, we weren't even sure if the plane was going to take off. So I'm very happy to be here.
I'm not sure your son's going to leave. That's the issue.
No, I think he's staying. So great to be here. Yeah, it's, at the beginnings, I'm actually born in Lebanon, in Beirut. I immigrated at the age of 5 to Canada. And from there on, decided, what I wanted to do. I loved science. I'm somebody who loves science. And So I have a background in, I did urban planning, I did engineering as well. I have a master's in engineering, so I worked in construction, on construction sites for about 4 years. And I actually have also a master's in finance from NYU. So I went to Concordia and I graduated from NYU in finance. Worked in finance as well in New York. I was at TIA, that you know probably as Nuveen, one of the largest pension funds in the US. So I worked in New York, in the US, covering the US and acquisitions in real estate. And then went to JP Morgan in London, where we actually met. I was responsible for France and Benelux in acquisitions in our core, core plus, and opportunistic funds for JP Morgan. Then I went back to Canada. I wanted to come back home. It had been 10 years I was away from Canada. I wanted him to grow up with my family and be back home. And so I started my own company for about a year. I did advisory. And then CDPQ came along. And CDPQ is actually Caisse de dépôt et placement du Québec. That's what it stands for. It's the second largest pension fund in Canada. I'll talk about that later on. Actually, I did real estate my whole entire career until this opportunity came in to be head of global investments in infrastructure. And I thought it actually went quite well together. So I covered the infra. We took the portfolio from a 12 billion portfolio to a 28 billion portfolio. I invested in OECD countries and then opened up into the emerging countries. So I had that experience as well to work in emerging markets. Very different than working in mature countries like the US or France or the UK. And then I had the opportunity, as you mentioned, to take on Otera Capital and make it from a Canadian portfolio into a global portfolio. So I took that on in 2019. Got hit with COVID 6 months later, and I was repositioning the company. Went from 14 billion to 30 billion in about 4 years. And now Otera invests in, of course, Canada, the US. Now 40% of the portfolio is in the US. And then we went into the UK and Australia. And then about 8 months ago, I took over Ivanhoé Cambridge, which is one of the largest real estate portfolios in the world. So I manage about $77 billion globally in real estate.
To put it into context, the CDPQ Ivanhoé portfolio is about $77 billion, which is larger than any other portfolio of any U.S. pension plan. So Caisse de dépôt Québec has one of the largest real estate portfolios. That's on an unlevered basis.
But that's in Canadian dollars, guys.
Canadian dollar, well, I guess.
So I'm not sure where it is anymore, but yeah. Okay.
Still large, let's put it this way.
Yeah.
So, yeah, tell us a bit about Caisse. Obviously, I mean, the reality is that beyond real estate is one of the largest in the world. Currently, you have about 400 billion Canadian dollars of assets, of which they have a significant exposure to real estate. So it's an important sector, real assets for you. Can you tell us a bit about what sort of investments it has and what is the Caisse generally speaking?
Sure. So I'll start with the history of CDPQ. So some people may know it at La Caisse, some people know it as CDPQ, some people know it as Caisse de dépôt et placement du Québec. Like I said, it's the second largest pension fund in Canada after CPP. CPP is a national pension fund, and CDPQ is a provincial. So provincial equals state for you if you don't know the difference. So it's a provincial pension fund for 6 million people. So we manage today $450 billion for 6 million Quebecers. And we actually expect it to be at $600 billion in 4 years. So it was created in 1965 by the Quebec government to create wealth for the people. So we invest the money, obviously, of the people. We're AAA rated, which I'm very proud to say, because it's very rare that you see AAA rated companies these days. And we invest in everything from real estate, infrastructure, private equity, obviously public markets, fixed income, we have a credit portfolio, so it's quite large. There's no more inflows coming into the pension fund. So you have pension funds that are growing from inflows. The growth from 450 billion to 600 is actually coming from our investments. It's an organic growth, and I think this is something very important to underline.
And in real estate, over the 77, how much have you invested in the U.S.? And then obviously the obvious question, how much you've invested in Florida?
Yes. So I'll start with CDPQ, because it's important to know that 40% of CDPQ's total portfolio is invested in the U.S. We invest in 48 states in the U.S., and in infrastructure, in real estate debt, as you mentioned earlier, private equity, you name it. I mean, we're invested in Florida. Florida is the 7th position in the 48 states that we invest in. In real estate, we have 45% of our portfolio in the U.S. So it's the lion's share of the portfolios here in the U.S.
And so let's talk about see how does CDPQ and you, Rana, see the? I mean, it's a difficult question because I think it was mentioned. We've seen how things change so much and so quickly. But how do you see the world of real estate investing as a global investor? What's your view on what are you focusing on right now, given all the volatility we're seeing?
Yeah, I'll start with the world for everybody. I think we're all seeing it. I think when you look at the risks and everything that's changing, we have a lot of volatility, ambiguity, uncertainty. I'd say when you think about geopolitical risks, I mean, look at the last 5 years that we just went through, all of us. Geopolitical risks, we have wars in Europe, we have never seen that. I mean, I don't think I was expecting this. Climate change. By the way, in Canada last year, our forests were burning. We've never seen that. We even have, we had floods in Montreal. Some of the residential assets are not even insurable anymore. So I would say climate change is a big one. We never expected all of these things. And then technology. I think when you think about where technology is going, just ChatGPT. Think about that one, AI. Think about 5 years ago where we were and where we are today. And where are we going to be in 2 years, And of course, economic risks. You think about real estate, our interest rates went up so quickly. We've never seen that in 100 years. So there's a lot of things happening, and you could say, okay, there's a lot of risks. But of course, as we know, there's risks and then there are opportunities, right? So we have to be very open, very cognizant about these changes, these fast-coming changes, and then how do we actually approach investment from this point on? And so we just went through our strategic review at CDPQ at a global level, but each one of us in our portfolios also went through our strategic review. And I think it was important to figure out, given all of this, what do we want to do more of and what do we want to do less of? And I will tell you, if you look at my portfolio where we're going, the geographical allocations are not changing that much. The sectors, okay, maybe a bit less of office, and we're going to talk about it, but the sectors themselves are we've done a lot of alternatives, we want to continue. But what's different right now is the way that we're investing that is changing. It's not so much the details, it's really how are we changing the way we approach real estate. What are we looking for? We want agility, more liquidity, more optionality, and I would tell you efficiency. And so when we look at the way we've been investing in the past, it was a lot of buy and hold. We're a large pension fund, you would buy a big building and you would put it in. It's not the way we're going to invest, I think, any of us. I think we really have to focus on value creation. And how do we create that value? It's really focusing on the different segments of an investment. So timing is super important. When do you go into an investment is super important. So all the alpha creation around that. So the moment you go in, your business plan, it's not anymore putting together a 10-year business plan, putting it into a drawer and then closing it. You have to review your business plan every year because the world is changing. So maybe your business plan has to change. So we've installed asset reviews, portfolio reviews every 6 months. We have 300 positions in the portfolio, 1,500 assets. And I want to go through them with the team over and over again to make sure that the team is actually executing the plan, and maybe the plan needs to change. And then I want a clear exit, because that's when you crystallize a return, is when you get out of a transaction. Some things will take 5 years, some 10, some 2, it depends.
How are you able to manage all these positions, such a large portfolio? You mentioned you want to do, so you're a long-term investor.
Yes.
Yet you're not trading, right? You're not tactical in nature. You want to buy assets and hold them for long term, develop them. You don't want to put them in the drawer. You want to actively manage them. How do you do that? Do you have a team inside CDPQ that can do that? You work with partners?
Yes.
How are you able to, and you're growing, right? So how are you able to do that with the resources you have?
Actually, I would say we're strategic and tactical at the same time. I think we all have to be strategic and tactical. So they're reviewing the business plan. I think that's a tactical approach, right? But yeah, I have 200 employees, right? And we have 10 offices. And so that's good. But we're an investor. We're not a strategic. We're not like Hines. Hines, for me, is our partner, is a strategic that comes in. And so our approach is very, be it in infrastructure or in real estate or even in private equity, we really believe in partnerships. For us, this is key.
So having great partners is a way, obviously, like us,
Well,
we're your best partner, right?
Yes. You're
Put
one
her
of
on
our
the
best
spot.
partners.
Yeah, one
because,
of the best.
no,
Now
because it goes to two things, right? It goes to scalability and opportunity cost, right? And the opportunity cost is important because we have finite amount of dollars and my team has finite amount of time. We can't be everything. We have to know who we are and then go with someone like yourself. And I would say leverage your know-how, leverage your team, leverage your boots on the ground. I can't have offices everywhere. 10 is enough, I think, for our size. But then if we partner up with you, then it's 1 + 1 = 3.
So some people in the audience here who are operators and real estate investors and might be thinking, well, how can I become partner of CDPQ? Or what do you look for in those partners? I mean, you might have even people who partnered with you in the past. What's important for you? Because obviously you're very partnership oriented, both on the development side and the acquisition. So what do you look for in those partners?
And the asset management
And the asset
side.
management.
And the disposition side.
Right.
The whole thing. Well, that's the thing,
That's
right?
that's
A
an
partner-
embedded. That's an indirect thing she's saying to me because she wants us to dispose of some assets, right? So
Well, yeah, I think there's things. I mean, you have to churn your portfolio,
Right.
right? So the first thing I would say is alignment. I think that's the most important thing. Alignment is super important. So what does that mean? We have to have the same vision of what we want to do with an asset or a portfolio. We have to be aligned on the vision. I would tell you, trust is very important. Transparency is very important. Sounds like I'm talking about a marriage, but it's very similar to that when you think about it. We've been partners since 2007. It's been a long time. And so you want to have that alignment. And you also, I would say in my career, what I've realized is important, what's important is skin in the game. I want to make sure, and I've said that to you before, that if I'm not sleeping, you're not sleeping. Right?
yeah, I don't sleep.
Neither do I. No, I'm sleeping well these days, but I think this is it. I think it's the alignment and the governance is very important.
Right.
Clear governance, clear rules of engagement.
What's the communication? One thing I often tell partners, how does an organization like ours partner with people like CDPQ? Is really the communication is the most important thing. We have to tell things, the good news, the bad news, be open, be transparent.
Yeah.
So the good thing about working with somebody like you is that we spend a lot of time talking about what we feel part of the same group sometimes, right? So the advice I would give for those who want to work with people like CDPQ and Rana is that, right? Be open.
Yeah, and I see my lenders as well as a partner, right? I mean, At the end of the day, they also play an important role when you think about the entire chain of investment, where it's not just the equity, it's also the debt.
Right. Let's go back to investing. You mentioned a bit the environment changes. It's interesting, you're not changing your allocations that much because you're probably a long-term investor. A lot of people think, well, should I get out of this place or go more long another place? You're relatively constant in your asset classes, in your regions, right?
Yeah, except one thing, if you go back, again, scalability, opportunity costs, we've been coming out of places where we've had one asset, for example, one asset in Indonesia. Am I going to put more in Indonesia? I'm just taking that as an example. No, I think I prefer going into specific countries with my partners and going deeper than diversifying just for the sake of diversification.
Right.
That doesn't really
And
make
in terms
sense.
of sectors, because we often talk a lot about sectors, that's a trade of the talk in real estate. Those who do industrial is the best asset class, but then you have multifamily. Office has been the dirty word for so long, might be coming back, I don't know. Retail was a dirty word a few years ago. How do you see the different sectors and how do you play them? Well, are you favoring some sectors over others and why?
Well, I would go back to macro trends. What are the macro trends today? This is important. You need to hang your strategy on something that's tangible. So what are the macro trends in the world? What are our conviction? If you go to, for example, let's say multi-residential, okay? So you look at population movement, you realize that it's clear, there's an urbanization happening, we have migration, and there is a lack of residential stock. Even though, did you know that there's $380 trillion in real estate in the world? I found that number quite interesting. 74% of that is residential. Can you even wrap your head around that? And we don't even have enough.
Yeah.
So I would tell you multi-res is very important. Student housing, you guys mentioned student housing. We have a fantastic platform in Australia. It's been performing extremely well, I would tell you. So student housing, depending on the markets in Canada, condos are very interesting. Not right now, but it's a sector that we're keeping an eye on. For example, in Canada, we reduced our amounts of malls. We had 29 malls. We have about 15 right now. We kept the good ones that we can densify. So not only do we have a mall, but around the mall, we're densifying with multi-residential assets, and we have master plans that we're putting together.
So your top calls will be residential?
Residential, industrial, and when I say industrial, it's wide, right? It's big box, it's last mile, it's logistics, it's storage. So I would say that is very interesting. You look at Europe, for example, they still don't have enough. So we have platforms in Europe that are performing. Australia, same thing. India, same thing. Brazil, we have a fantastic platform with Prologis that is really, we're at the forefront of that one, and the returns are great. The FX is a different story with the Brazilian real, but yeah, so logistics, industrial, multi-residential, retail, it depends. I would say like the strip centers with the grocery store anchor, that is good, but they're small assets. In 77 billion, you have to put in something that makes a difference.
You haven't mentioned the word office.
I'm getting there. I'm leaving that for the end.
Okay.
Because office is more complex. We see it today, right? How many people are actually going to the office? And actually,
And you have a big office portfolio, just for caveat. You do have.
Well, 28% of our portfolio is in office. It's a lot. 28% of 77 billion. But there's office and there's office, okay? And the different regions behave very differently. So where office got hit the most was here in North America. If you look at Asia, people have been going to the office, and culturally it's normal for them to go to the office. So there's no real issue in Asia or in APAC. You look at Europe, for example. I was actually asking ChatGPT the other day, what's the highest amount in the Western world of people going to the office, and said 3.5 days. I said, okay, where is this? He said, Paris. And it's true. We actually have a big portfolio in Paris. Paris is the place where people are going the most to the office because, one, the transportation, when you look at the transportation network, it works super well, and their apartments are small. And so they want to go to the office. They enjoy it. So Europe has been actually picking up much more than North America.
Surprising, because the French work 30 hours a week at most, right?
Don't say that. That's coming from a Spaniard.
Okay, I just have to say, sorry, there's any French. I think I saw, no, he's French. There's some French here, but
It's not true.
right.
But yeah, but then office, let's continue on that. I know you want to go to the next question, but there's different types of office, and when we looked at our portfolio, we have Class A office that we own together. We've got great stuff like CIBC. Yeah. CIBC, I just topped off the building with Steve from Hines last week. The topping off of the double tower, the second tower, 141 Bay in Toronto. It is the best office complex in Canada, and we own it together.
And it's leased.
And it's leased. So that's doing super well. Texas Tower that we own together, where your headquarters are, doing super well. So you realize that it's all the Class A, top of the line, it's got all the amenities. That stuff is doing super well. Everybody wants to work there. So that's one bucket I don't have to worry about for now. The middle bucket is the stuff that needs to be a bit repositioned because it doesn't respond exactly to our needs anymore. COVID changed a lot for us as human beings, our needs have changed. And so real estate is a tool for the human being, and that tool has to also change. And so when you look at the office buildings today, people don't want to go anymore where you and I used to work when we were younger, the cubicle. I was fine with it. Doesn't seem like it's fine anymore. So now it's like putting in amenities and putting in capex and repositioning these assets, which actually we're doing together on some of our assets. That's a bucket that needs to be repositioned. Fine. The other bucket is the stuff that doesn't respond anymore and not sure if it's the highest and best use of that asset. And then you ask yourself, well, can I convert it? Can I convert to residential? And then some of it is non-convertible. Structurally, you cannot convert it. And so that becomes a completely stranded asset. And that's the stuff that all of us have in our portfolio that we need to decide what we do with.
And what have you been thinking about those things that are, because a lot of people talk about conversions to residential. We looked at it. We have a couple, but I can tell you it's probably even harder than developing a building off the ground.
Yes.
Just because of the things you find in these buildings, asbestos, technical issues,
But
complexities.
even structurally, it wasn't conceived as a residential building.
Are you able to do it? I know you've been working on some of these, right?
Yeah, we're working on some. I financed one when I was at Otera in Quebec. It's working very well. But I have to tell you, it's more expensive because of the reasons that you're underlying, but more expensive, and a lot of times you just can't do it. And so, yeah, we've been trying though. We've been trying. There's one in New York we're trying, but you need to work also with the municipality. I mean, because when you look at the costs, you need some subsidy or some help from the municipality. So it's a public-private partnership, I would say.
And you haven't mentioned. I guess you were going to as well.
I don't know.
The digital infrastructure assets, because you and I have been talking a lot about it, and there's the new buzzword, right? We saw life sciences being kind of the interesting asset class during COVID, and now everybody talks about data centers and digital infrastructure and AI. How do you play that? Is it infrastructure? You obviously know infrastructure. Is it infrastructure? Is it real estate? Is it real? Not? Is it going to become obsolete? You have now DeepSeek coming out and changing the world. What are your thoughts on that? Because you guys are actively working on it.
Yeah, it's a very big topic. And we have invested in it, be it in real estate or infrastructure. Is it real estate or infrastructure? I think it depends on how the investor looks at it. For us, I have got my own view. I think the development part of it, finding the land, the permitting, getting the energy, finding the tenant, for me, that's real estate. And then after that, the long-term hold, I think it's more infrastructure. But that's my personal view. We're still, wrapping our heads around it. It's moving very quickly, but I'll tell you why that's my personal view. Because what's the definition of an infrastructure investment? If you don't know what that is, pretty simple. It's long-term, sustainable, predictable cash flow, monopolistic. And it is monopolistic. And to be honest, I'm not sure today that I want to be exposed to the technological risk. And the other thing that's restraining all of this is energy. I don't know how much energy we need to support these data centers. And so I think I'm more in the short-term strategy than in the long-term strategy for now. But, it's evolving, right?
I think it's a good way of looking at it, because the short term, we kind of know that there's significant demand for the land. Obviously, the short end of the data center development is procuring the land, the permitting and entitlements, procuring the energy, which is probably the biggest bottleneck, getting energy, and then building the basic core and shell, which is some of the things we've been talking about, we do, but then let somebody else figure out what's going to happen with the data center in the future, right? Who's going to buy them, how obsolete or non-obsolete they're going to be in the future is the question, right?
Yeah, and then I tell myself, as a real estate investor, what's the worst case that's going to happen? I'm going to end up with a piece of land. I can just do it into logistics or industrial. It's got to be well located.
Right.
But that's, we're really thinking U.S. now. If you look at the world, you can't put data centers just anywhere. Depends on the regulation, depends on the security of the data. So when you look at the countries around the world, there aren't many where you would want to put something like that. So
right. Yeah, it's not an easy answer, right?
No,
a lot of
it's
people are
not.
trying to pile on, and
Well, it's moving so quickly.
They're
to your
moving very
point,
quickly.
right? So
One thing that also affects Florida, because again, we have a lot of people from Miami here, which we've also discussed in the past, and I think we all feel it here in Florida, is the sustainability of, and again, this is not ESG, which we can obviously talk about. It sounds like that word shouldn't be used anymore in this country. So let's call it sustainability, climate, energy efficiency, natural disasters. Obviously, Florida has its own share. That's one component of it, and then the sustainability of the assets, right? How important that is, and how does you and the CDPQ look at that, right? So two questions. Is that a big component of how you invest capital? Is that part of your investment process, let's put it this way, like looking at these risks? And then secondly, the risks of making sure these assets are sustainable in the future, and why, right?
yeah,
Because often people are making that a political stance, but quite frankly, it's a return issue, right? It's actually the way to make money for your investors, and that's why we look at it, right?
yes. So it's an intricate part of CDPQ's way of investing. I have to tell you, it's fundamental for us as an institution. Last year, we were honored with the award, the global award of being the first pension fund in the world, pension fund and sovereign wealth fund, the forefronts of sustainability. Yes, and it's an investment issue. I mean, yes, it's got an impact and it's doing the right thing, but fundamentally, we're doing it because we're investors. We've given ourselves targets. I went through it in infrastructure and in real estate. And Ivanhoé has been at the forefronts of sustainable development and investment as well. So I have to tell you, it's very important to us. And in my personal experience, I have to tell you, when I was responsible for France and Benelux at JP Morgan 15 years ago, Europe was already moving on that. Right. And I saw the impact on our investments. I saw the impact from a CapEx point of view, and I saw the impact from a valuation point of view. So if my building or my investment was not at par with regulation or expectations, I got asked for discounts when I came to sell the asset. And so we are seeing that, and valuation is following. That's 15 years ago. So
you think it's going to happen in the Americas as well?
I'm convinced. We're already seeing it. If we have to upgrade our buildings too, you know why? Even if it wasn't a regulation thing, it's the ultimate client. It's the user that is asking for it, because they want proper indoor air quality. They want to go into buildings that are, that give you an experience, and it's even the user that's asking for it. And our tenants are asking for it. So no matter how you turn it, it's here.
Right. I mean, for me, it's clear. If those in the audience who build buildings like ourselves or invest, a major investor, long-term investor in real estate is telling you it's important for them, then you should be thinking about it, right? Because you're the ultimate buyer of some of these assets as well, right?
Well, I mean, if it's not up to par and I believe in the building, I'm going to come back asking you for a huge discount.
Right.
So, and we're really talking about return here. We're not talking about social impact or things like that. It's not just to do the right thing. It's really from an investment point of view.
Exactly.
Yeah.
At the end of the return. In the interest of time, because we do have some time for questions, but I do want to shift a little bit to finish up on, a lot of people look at you as a global leader. And then you have students also, and obviously in the audience. What key lessons? What are the key things that make you? I mean, I know some of them, but why do you gotten to where you are? And that particularly in the female leadership here, and to the students, what are some of the key aspects that made you? And what do you look for when you hire people like this? So it's a bit of a mixed question, but
yeah.
I think you've done so well, and you represent some of the things that people look at you, and how can I get to your position, right? What are the key things that you look for people?
I think, one was what drove me was curiosity and finding purpose. Purpose is the most important thing, I think. And, when I was 10 years old, I was thinking, okay, what do I want to do? I didn't know exactly, but the one thing I wanted to do is have an impact on people's lives. That was what I wanted to do, and have a positive impact. And, initially I wanted to be a doctor, and then I realized I didn't like chemistry. I liked physics. But then, it was like real estate. Real estate is we spend 95% of our time in real estate. It's not just an investment, it's part of our lives. And so I said, okay, real estate. I'm not going to go through the entire story because we don't have time, but I think purpose is number one, was really to make a difference. And now I'm investing in real estate, and I invest the money of people for their pension. So when they retire, I'm working to give them a better life. So at least I found sense in that. And curiosity. Keep pushing, keep asking. We live only once. I mean, for me, it was like, I live once. I don't want it to just be good. I want it to be great, and I want to do great things. So good is not good enough. Go for great. And push. There's nothing stopping you, right? As a student, your life is all in front of you. And did I know exactly that I would be here? No. But there's one thing, is I listened to my inner voice. And that is super important. It guided me through everything. And I really ended up here because I did things that were interesting to me and innovative, and I was creative as well. So I would tell you that. But yeah, I think trying to do the greatest things that you can do with your life and be adventurous.
And you look for the same in some of the students that you hire, I would assume.
The one thing I look for is passion. You need to be passionate about what you do. Because if you're not passionate about it, you're going to give 90%. If you're passionate about what you do, you're going to give 150%. And I think that that's the most important thing. You said that you were passionate too. I heard that. Yeah.
I don't know. Sometimes.
Yeah, because it pushes you to give more.
It depends on the subject. I can be very passionate, but sometimes.
We're talking about real estate.
Yeah, real estate. You Spanish people, I don't know what you meant, Rana. So, okay, we gotta cut this off because it might go in the wrong way. Do we have any questions, Andrea?
Okay, you want to start with an easy question, or do you want to start with a challenging question? I'll start with an easy one because both of you can answer this. So, what book, magazine, or podcast do you recommend for real estate students and professionals? Where do you get your information? Where do you look?
Oh my God, I don't have time for podcasts these 8 months.
I don't listen to podcasts as much as trade. I mean, we're older school, so I guess. Yeah. Although you said earlier that when we were young, we're still young, by the way. Okay,
yes,
so,
when we were younger.
I read a lot. I would advise those of you who don't know. I think I mentioned it yesterday. There's Google has this system that you can put files into the Google Gemini, and it creates a podcast. So I've tried that. It's very interesting. But I think there's a lot of trade publications that you can read. Obviously from PRIA and from Real Estate Alert and from there's so many different places. IREI, so happy to provide information on that. Some of the investment banks publish a lot of real estate research. So Green Street is a great source.
Yeah, Green Street is very good. But I also read The Economist. I think The Economist, I like, because it's a global portfolio, I need to understand, if you go back to the risks that I mentioned, geopolitics, right? So for me, The Economist, the FT, Washington Post, every morning this is what I start off with. CNN as well. I need short spurts. I don't have time for long things, so I read articles, but I love The Economist.
Along those lines, there's another question about, since you did go from a national to an international platform, how did you contend with the geopolitical differences in the countries that you're investing in?
I would tell you, me personally or CDPQ, because I've always looked at things globally, right? So I think, given my background, given the fact that I've lived in so many different countries, I've always thought in a global manner. CDPQ is the same. I mean, if we're all tied to each other, I can't look at the world just from a national point of view. I mean, we're seeing it. We're all tied to each other. So you have to look at it from a global geopolitical point of view. What's happening in China is affecting us here. What's happening here is affecting us in Canada. What's happening in, I've always looked at the world like that. I don't look at it from a national point of view, ever.
So, and for those of you wondering where the question's coming from, so you can see the QR code here. It's also on the back of your badges. So if you want to submit questions, I can see them coming in here. And you're mostly anonymous, although I can see some first names here and there. So Donald asks, how is Florida and South Florida in particular viewed? As a good or a great place to invest? Donald would like to know that.
Okay.
They gave you two choices.
Yeah. Everything's relative, Donald. Personal investment, great. No, I guess the question goes to, it depends what. If we're talking about real estate, I mean, because there's private equity, infrastructure. So if we're talking about real estate, if that's the question, Donald, going back to sustainability and climate change, I will tell you that all the coastal areas globally are areas that we spend more time understanding. Be it here, be it on the Mediterranean, be it, there is erosion going on, and so we have more advanced systems that we've had when I came out from engineering, and we would look at the 100th year flood zone. Even in Montreal, there are great places we can't even invest anymore. They're not insurable anymore. So it's become more complex, but I think there's opportunity everywhere.
Yeah, I think, I mean, from the perspective when we talk to CDPQ, South Florida and Florida in general is a growth state, right?
Yeah.
The Sun Belt itself is attractive because there's been a lot of corporate and demographic migration. So when you look at ingredients to look at an investment destination, Florida in the Southeast is a great component of that. Easiness of doing business, to some extent, obviously demographic growth, economic growth, has been the beneficiary of a lot of that, which is a strong point to invest here. And then you have to look at some of the issues, right? As you mentioned,
Yeah.
Climate and risks being one of the toughest ones. I mean, we're not a lot of people who live in Miami. We're not immune to property taxes or insurance. Insurance for commercial real estate, not only your own homes, has been a very, very difficult thing to underwrite in South Florida because it's been growing significantly. To make at some point. Makes your investments unviable. So I think some of these things are a balance, right?
Yeah. You have to look at the risk and the return, and does the return compensate for the risk? And that's any investor, you look at that all the time. You have the risks. It's how I've always done investment. I look at my risks, and I'm like, what's my return? Does it make sense? Am I getting a premium? Yes, okay, makes sense. If not, no premium, it's not a good investment. So, and at what stage? Is it in development? Is it long-term? So the question is, we can spend an hour answering that question, but I think, yes, it is a market. It's the 7th state in which we invest in as CDPQ. We invest billions here, so.
The bottom line is we were both very keen on investing this.
Okay, so the answer is it's great. That was the answer. Here's a question relating to the size of your portfolio and investment. So, does your size place you at an advantage or disadvantage, like turning the Titanic when you're trying to respond to market changes?
That is an excellent question. Sometimes it does feel like the Titanic, but it's not, because it's made of different components, right? When you break it down, the portfolio, it's not monolithical. It's really different components that actually work together, and that's portfolio construction. So. No, I think we're able to move it because we have the right partners. In the places where it's more difficult is where, it's like a stranded asset, or it's really on the fringe. It's not so much the bulk of the portfolio. And again, it's a global portfolio, so yeah, it's fine.
There's a somewhat longer question that I don't think we can go into the whole part of it, but it mentions Bitcoin. So, do you have a perspective on those types of currencies and what your work involves, or the future?
Well, we've been looking at it, closely to understand if it poses a risk or an opportunity. Something very interesting came along my desk a few days ago, which was, how do you maybe you create liquidity by selling the asset in pieces online. I'm like, oh God, I'm not sure I'm ready for that yet. It's not like, but there's many ways that I think that the Bitcoin, the internet is changing the way we're doing things. We're not there yet, us, but of course we're keeping an eye on it.
One thing that is interesting, Bitcoin is not a real estate, so we don't invest in Bitcoin, and everybody has their own view. What Bitcoin and blockchain has brought, which is impacting real estate, is the disintermediation of all the different intermediaries that you have.
Yeah.
And that's going to continue to accelerate. Even for big investors like CDPQ, historically between the investor and the asset, there was a lot of people, right? You have advisors, consultants, your partners, all kinds of, people who sell, commission. All that is going to eventually get significantly reduced. And Canadian plans have been at the forefront of that because they invest in funds, right? But you also invest directly.
Yeah.
And you want to minimize the friction. Canadian plans have been notorious for trying to reduce costs and fees and intermediaries because you got to give that money to your pensioners, right? So bottom line is these technologies are going to continue to evolve and it's going to disintermediate a lot of people in our industry.
It relates to currency risk. Right?
Yeah, I mean, but we were keeping an eye on it, but we don't invest in it. But yeah, you have to keep an eye on it. I mean, it's there, so yeah.
Okay. I know you talked a lot about the different sectors. Is there a particular sector or niche that you just are not interested in for one reason or another, or it doesn't fit your profile, or it's just out of favor with you right now?
But like I said, it depends on the location, right? If it's in North America, it's one answer. If it's in Asia, it's another answer. If it's in Europe, it's another answer. So I would say no, but what I don't want to do is look at everything. We really have to focus. And the stuff that isn't in the focus could be opportunistic. But the focus is clear for the team what it is. But I can't say no to a good deal if it's not. But is there something that I would say no?
Maybe condos, I would say, residential for sale.
For now. But I mean, in Canada, the past cycle was very good, so it depends. It depends.
Hotels, you're a big investor in hotels?
We're not a big investor in hotels. We have a few.
Right.
But when you look at the sector, it's actually a quite interesting sector, right? I mean, look at hotels. They're performing really well. So I don't like to say no to something. I just like to focus on, get the team to focus on things. Things move so quickly. So maybe a Class B office, Class C office. Yeah. I'm not sure I would reinvest in that right now. I have to manage the portfolio. Yeah, maybe that. But everything has a price too.
So this is like the rapid fire round here. There's a lot of good questions, very smart audience. This one is interested in your view on data centers. So they're asking what countries are considered smart to put data centers based on the challenges discussed.
So you want to take that one, or you want me to take that one?
What was the question again? Sorry.
Which countries are considered smart to put data centers based on the challenges discussed?
Which countries?
Yeah.
Yeah.
I mean, we're seeing it in a lot of places, right? I think the US is making a big push. In Europe, Germany, France, Italy, Spain.
Switzerland.
Spain is interesting because the key to data center development is the power, as I said earlier.
Yeah.
So you got to find the locations where you get the power, otherwise it's pointless. So one of the things interesting in Spain, where we're building 2 or 3 data centers, is that the country, not in Europe, in the world, that has more renewable energy. In fact, they have more energy based on renewables that they can actually consume. So the power is plentiful in Spain. The problem is that you can't just put a data center, they don't have enough demand for it because it's hard to produce a data center in Spain that serves the entire Europe. I thought that with technology, that the data transmission will be very fast, but by spending time with some of our technology partners, the location of the data center, because of the latency, is still very important.
Yeah.
So you cannot just build them anywhere, right? Which people think that can be done.
No, you can't build it anywhere.
But
and
yeah,
Australia is the other one.
is very big, so I think it's all about power procurement, quite frankly.
It is. It is power and, again, security of the data, right?
So there's a variety of questions. We don't really get into political things, but do you have any comment on how tariffs might affect the real estate and affecting real estate and the U.S.-Canada trade?
I'll start. I think at the advisory board we had a discussion about this yesterday, and it's something we're spending a significant amount of time. So putting aside the political connotation, which is not political, it's quite frankly, it's economic in nature, right? we have two very big concerns. Tariffs, which are impacting costs, there's no question. Obviously, we don't know, tomorrow the tariffs might be different because they change by the day, right? But if they implement tariffs, it's gonna have a significant impact on costs for us to build, whether it's steel or the timber coming from Canada, which we use in our multifamily assets. So we are concerned that's gonna be passed on to the consumer.
And the steel too, and the gyps comes from us too, so there's a lot.
So one component is the tariffs, which is a big concern. The other component is labor. That's even more immediate because of the immigration directives in the United States, which you can agree or disagree, but what has happened is it's carrying a lot of labor to come to work. There's a lot of non-documented immigrants who are working in the construction business. A lot of you know that and seen it. And we in our own construction sites have seen people not coming to work because they're scared that obviously you see the TV, the ICE police is going to come, etc. So putting aside the politics of it, what's happening is putting pressure on costs. And we're going to see, for those of you who develop, start putting a good premium into what those costs are going to be, because it's not crazy to see 20% increase in labor costs as part of construction sites. So all in all, we're going to see costs go up. And obviously, prices of assets prices of assets are going to be worth less because there's more cost embedded on it. So,
and there's also the impact on the currency, right? So we're not sure what's going to happen on the currency, both sides of the border, but it's just another thing we have to address if it happens, and how is it going to happen, when it happens. But yeah, we have to work with it. But it's going to have impacts. What are they exactly? I mean, we're throwing out there. I'm sure you all are thinking about it.
It changes by the day, right?
So I don't know. Like I asked yesterday, what is our view on the Canadian dollar? What's the curve that we're looking at? What's the worst? And right now we have a curve internally. I said, well, give me the worst case based on this. I have to look at both of them.
Unless Canada adopts the US dollar and becomes part of the US, which is an option.
Moving on. Okay. Here's one that comes back to the insurance topic on the subject of insurance of coastal areas. Is your organization, so either one of you, looking into insurance alternatives, i.e. captives?
Yeah, that's a great question. It's a great question. We've actually been thinking about auto-insuring certain things. I'm spending a lot of time even at CDPQ, not just in real estate, but thinking about where is the insurance business going, and is that what's going to stop us from investing or not? And you can price it in. What's the price of that? So how do you auto-insure yourself? That's a great question, whoever asked that.
Maybe people just know that when you see a fire in LA or a hurricane here, the way I view it is obviously, first of all, the disaster and how people are suffering. But the second one is our assets are worth less immediately. And just every time there's a disaster, if you own real estate, it's worth less. Just because the premiums are going up and you're going to underwrite it, and your NOI is lower, and so you have to really underwrite as much as you can those risks.
Very true.
But it's hard, right?
Yeah, it's hard.
So we've had a couple of major black swan events over the last 15 years or so. So the pandemic, the Great Recession. What keeps you up at night? What are you concerned about that might be unpredictable, but it might be on the horizon? Kind of raised AI as both a benefit and maybe a challenge. Do you have anything that keeps you up at night?
For me, it's AI. I have to say, I think it's super interesting. I think it's when I look at it, I'm mesmerized by it, but it scares me, and it's because I can't see where this is going, and it's moving exponentially, and it's not a trend. It's not something that's going to come and leave. This is something that's going to stay. So for me, I would say that's the one. And how is it going to impact people? How is it going to impact societies? The generation. I think about my son, and I'm like, okay, in 10, 15 years, what's going to happen? So I think that's the one.
Okay, and final question. This is one we like to end on. What advice do you have for the younger people in our audience who are just starting their careers?
I'll tie it to what Rana said, because I completely agree with her. Besides geopolitics, which keep me concerned every day, because you wake up and look at something new and your assets might be worth more or less. AI, I think for those of you in the audience and people who are starting or going to start, is get into the bandwagon of AI. You know, people's not about the Excel spreadsheet that when we started in JP Morgan, we used to spend weekends doing. That's no longer going to be done by an analyst. That's going to be done by machines. So what you need to do is understand how to work with AI.
Yeah.
That's going to make you extremely competitive, right? I would say. I don't know if you agree.
No, I totally agree with you. And I would say maybe one of the most important things to be is resilient. In a world that changes like this, you have to be resilient and innovative. You have to maneuver around things. And the human being will always find a way, will always maneuver. So to your point, rather than not looking at it, work with it and evolve with the world that is changing so quickly. I really am.
Thank you for a great opening session. We have a networking break. You've got 30 minutes to close deals and come back and join us.